o'clock in Hong Kong, time to get inside the news. Finally, a little relief, but it may not last. Shares in Asia rally from 16-month lows. That's after policymakers in the European Central Bank said they're looking at ways to boost the power of their Euro Rescue Fund. Stocks ending a 4-day losing streak, though analysts still urge caution. Some of the big losers making up the most ground. The Kospi up over 3%, led by banking stocks. That optimism also lifting the euro up above $1.35, but a bumpy road ahead, with calls increasing for the ECB to cut rates at its meeting next month. Traders on guard for possible yen intervention. The end of September marks the end of the first half of the fiscal year, meaning expect repatriation from exporters. And emerging market currencies also gaining after recent losses. The Indonesian rupiah up over 1%. The weaker U.S. dollar sending gold and silver higher. But after some steep losses, analysts wonder whether the yellow metal is losing its safe haven appeal. Earlier, I spoke to Jonathan Barrett of Commodity Broking Services in Sydney about gold, and I asked him what was behind the recent drop.
Oh, Cathy, look, I think that's one of the major contributors, believe it or not. Remember we had that run on in silver about 2 months ago? Well, it's happened again, this time in gold and also in silver, because we've seen those dramatic moves and also those dramatic increases in initial margins. It is interesting because not only did the CME put up those initial margins, but also the spot deferred market, we're seeing a significant increase as well. So I think it's one of the major points as to why we've seen such a radical fall in the price of gold, because people tend to pyramid positions. And once they pyramid, then they start to use the profits of their trades as initial margins because they can. So when you do get a turnaround in the price and when you do see an increase in the initial margin, it just acts as one great big snowball. Starts off at a trickle, then all of a sudden it just accelerates. And that's what we've seen in the gold market. And remember, we also saw it in the silver market, because remember, silver dropped close to 30%. So I think the exchanges have got a lot to think about when they do change these initial margins, and certainly when they start to put them up so aggressively.
He also said he remains bullish on gold.
You've got to hang on for 2000, I think. Look, at the moment, we've entered into a consolidation phase for gold. The immediate range would have to be 1530 on the downside, 1760 on the top side. In any move like this, you've just got to wait for the dust to settle, and I think that's what we're going to actually see, just a little bit more consolidation. Once we get over the issues in Europe, once we get the spend package in the US out of the way, you will start to see gold start to move to the top end, and I think it's just going to take a little bit more time. The London Bullion Association's meeting, which occurred last week, suggested that gold should be around 2009 by next October, and I'm pretty confident that it'll actually be there as well.
After some high-profile cancellations, better news on the Hong Kong IPO front. CITIC Securities says it has enough commitments from investors to cover its planned IPO. China's biggest publicly traded brokerage plan a listing of up to $1.9 billion US. A new warning on China's property, but a mild one. S&P says domestic developers could face a strain in their liquidity if sales fall steeply in 2012. But the ratings agency says declines still look unlikely at this point. Two sources in Apple's supply chain in Asia tells Reuters they've seen no indication of reduced orders from the California company. That eases some worries after a JP Morgan report said the company was lowering orders for parts going into their iPads. Shares of Asian Apple suppliers largely higher on the day, tracking Asian indexes. And stay with Reuters Insider for more market news, including an interview with the former Greek finance minister on how the country could avoid a default. I'm Cathy Yang. This is Reuters.